cycle going to end and how exactly is it going to play out? We got two very opposing views on that today. And we're going to hear the other side because you guys probably used to hearing me give my perspective on it. Let's hear somebody who has a differing opinion and somebody who can very successfully articulate that. Someone who's a credible source and definitely somebody who has the conviction to come and face me and face my questions about it. I'm talking about the one and only T-Ird that you might know from Crypto X. He and I are going to talk all about it today here, so make sure you strap in because you don't want to miss a second of the next hour that we're going to have together. Shut the FUD up starts right now. Good evening, everyone, and welcome to a very late edition of Shut the FUD Up here on Reinvent Ideal. I'm your host, Cairo Copeland, and I see some of you are already there in the chat. Hello, Tam Tam, my number one cheerleader, so good to see you. Armando, good to see you too. Well, I wanted to start the stream just a little bit early to go through all of the stuff that I usually go through with you guys before I bring T-Ird on, because I only got an hour with him, and we want to use like a very productive hour with him. So before we start the hourglass sand going down here with them, let's look at our usual stuff here, because we did have a lot of action going on today in the overall crypto market, which, let's see, let me pull some of that up here and take a peek at it. Look at this here. Well, let me refresh here and I'll say, look at this. Yeah, look at whoa, yeah, definitely glad I refreshed right here, because look at this. Remember, like, a lot of people were thinking we were going to have a pretty bad, there we go. We were going to have a pretty bad September. Well, not so much right here, because when you look at the chart here and everything, what I see is Bitcoin has made some serious ground recovery in the last 2 days or so, because like Sunday night, it started pumping up and everything. And then also Ethereum has regain some of what it's lost, because that thing had fallen down below 4,000, was down in like the 3,800s. Now it's back up in the 4,200s. That's really good news for us that we came back. Hopefully it holds this, because you see, I'm not saying that this is like set in stone or that this is perfect or anything, but historically, whenever we had a green September close, that meant we had at least a green October and a green November. I don't know about you, but I really like seeing green in Q4. I'm one of these guys that thinks we're going to have a very difficult Q4 ahead of us just with all the uncertainty, but I'd love to be proven wrong about this. Hopefully our guests can prove me wrong about that too. And looking down here, still shining like a star, is good old E-Hex, recovering lots of ground that it lost. P-Hex has recovered some too, but man, nothing is shining quite like E-Hex right here. Let's take a look at what GoPulse has to say about that. Let me do a refresh. Still, we're not quite reflecting anything serious happening with the 1100 Ethereum that got bridged into PulseChain. You probably saw about that. I don't think that really reflects in any of these prices yet, but that's all right. There's still plenty of time for those to be deployed, if they're going to be deployed. I mean, I can't imagine why you would bridge anything over to Ethereum. Or why would you bridge Ethereum to PulseChain just to hold Ethereum there on PulseChain? That makes no sense to me. So hopefully something happens with it and it pushes some of these prices up, but that still remains to be seen. We take a look at the big news today. There is finally a story worth talking about here on the no good CNBC, and that is a government shutdown is very likely to happen. Over on Polymarket, the odds went up to 70%. Now, typically when the shutdown happens, it's not as catastrophic as they make it sound. Like, it's not going to be the end of the world. Your social security check will still go out to you. But what is going to happen this time is there will be some mass layoffs of government workers that we probably don't need. But the big story, I think, is this one here. The Labor Department is going to use that as an excuse to not release the jobs report. That's a very important one coming up on Friday. I think it's like the first round of unemployment claims that they're going to be having to release, or they're supposed to be releasing on Friday. But yeah, the Department of Labor and Bureau of Labor Statistics, they've really been looking for like any excuse they can not to release any of the data that they need to put out to like give the economy what it wants. I mean, I think that there's other ways for the smart money to find out this information. But if we have the government shutdown, you're not going to have anything official come from the government. And that could be something that adds to the uncertainty. And what's very typical, like, even though they say October is a good month and everything, it's very typical that the first 2 weeks of October are not that great. Like usually they suck. But then 2 weeks in, and we finally have some certainty or less uncertainty, things start going up. That's at least what happened last year. And I think it's pretty typical to have seen it in previous cycles. And also, like October 15th, we got some CPI data being released. That will certainly help kind of create some certainty that the market is hungry for. Check this out, though. The DXY finally broke down below 98 for the first time since like the Fed meeting, or really after the Fed meeting, it kept shooting up and it's kept going down, and it hit like this top of 98.58. Well, it shaved all of that off here and finally went down, I think as low as 97.93 earlier today. So this is really good here that the dollar is weakening, because once that gets down to like the low 90s, well, historically, that's where we had those amazing parabolic bull runs that gave us euphoria. 10-year Treasury hasn't really budged much, still at 4.13. Don't really foresee this making much dramatic movement in like the next, maybe the next month. I don't really foresee a lot of dramatic movement from it, because next Fed meeting is until October 29th. They will cut again. What I kind of foresee happening, though, is like if the 10-year Treasury goes down at all, it goes down right in line with the federal funds rate. I kind of see those two rates sticking to each other and being very close together. There not being any sort of yield spread between the two of them for at least until the end of the year. I don't really foresee a lot of difference in them. But I could always be wrong. We'll see. Do got something very interesting to reveal about the Federal Reserve, which I'll get to in a moment. But first thing I want to say is a usual housekeeping thing I do. If you want this book 100% for free, it's called Your Parents Were Wrong, Debunking and Replacing Outdated Advice. You can have this book 100% for free. All you have to do to get it for free is head on over to my Substack. That's reinventideal.substack.com. I repeat, reinventideal.substack.com. I meant to release a new post today here, but I've been a little too busy kind of preparing for today, because like this is I think this is probably the most important stream that I've done in all of the streaming that I've ever done. So I wanted to focus on like having the good questions and content for you guys here today. I will put up a post probably tomorrow or the day after tomorrow. But if you head on over to my Substack, just click right here in the middle where it says free gift. And then you just scroll down right here and click subscribe. And it's 100% free. It doesn't cost you anything to subscribe to my Substack. And then I will send you an email that has a link to where you can download a copy of this book, Your Parents Were Wrong. Now, the thing I wanted to talk about the Federal Reserve that I did not expect to see for a long time was something that I discovered. You might have seen my post on X about it here. I just got to change the year over here and then change the day to the 1st. Check this out. I hope I don't need my eyes fixed, but look at this. Yeah, it started out going down at the beginning of the month, but let's see, it bottomed at 6.6 trillion, and then it got up by, it's only a small increase here of about $6 billion. But the idea that the Fed possibly has pivot on the balance sheet, that could be big news. $6 billion, though, is not a lot to write home about. It's not really a sign that they've changed policy yet. But the fact that, like, it's not still going down, that suggests that maybe at least quantitative tightening has stopped. we can't really say quantitative easing has begun just because it went up a little bit. But the fact that for the past, let's see, August 27th was when this started. Okay, so for a whole month, they have done zero quantitative tightening. That could be the start of a policy change with the Federal Reserve balance sheet. I sure hope that's the case. That means the money printer is about to go off or could go off at any minute. But I'm not going to say nothing until I actually have confirmation of this here. So those are all of the typical things that I like to look at with y'all. And as you can see, T-Bird is here with us finally on stream. You can go ahead and unmute yourself there, T-Bird. And welcome to Shut the FUD Up. I know we got a lot to discuss here, but let's start by this here. Man, you've been in the community for a very long time here. So in case like some Hexicans out there are not on X or they've been living under a rock and have never heard of T-Bird, tell us, who are you and how did you get into crypto?
Hey everyone. Hey Cairo. I really appreciate you having me on. So the start of my crypto journey began early around the Bitcoin halving of 2020. This is the short form. And I didn't actually, when I first got into crypto, I had no idea who Richard Hart was. I had no idea his history, his contributions to crypto in general, and his kind of influence in the crypto space. So I kind of just jumped in, sort of was compelled by a lot of the narratives that were circulating at the time during the halving of 2020, and navigated the chaos right before the DeFi, that first DeFi wave, what's known as the DeFi summer of 2020, and navigated through that. And it was just good times. Everything was pumping. Well, at least it was the beginning of it was the first wave of the bull cycle during that time. And then when Hex made its initial top in late October 2020, that was like the initial point at which I discovered the existence of Hex. I still didn't know who Richard Hart was, but started doing a lot of my own research and digging. And then within a couple of days of seeing who Richard, getting a decent gauge of Richard Hart and his history, and also the community itself, I was very bullish on the community as a whole. So I jumped straight in, and I haven't looked back since. So I fully immersed myself into the community as someone who fully advocated for the true ideals of crypto, which was one of the primary incentives and catalysts for me getting in initially. And now it's crazy. It's nearly 5 years later. So it's been a crazy roller coaster ride ever since.
Yeah, it sure has. It sure has. So speaking of that roller coaster ride, when you take a look at like where the market is at today from where it's been and all that's led us to where we are today, what is your current assessment of the crypto market as it stands right now?
From a macro standpoint, in the context of me, so basically, I have a strong adherence to the 4-year cycle pattern, as you might have alluded to earlier. So, and based on that specific pattern itself, in the context of crypto, in the context of the macro in general, what's going on in the market as a whole. My general assessment basically is that we're in the tail end of the bull, in the context of just everything. If you're looking at Bitcoin alone, and Bitcoin essentially historically has always steered the rest of the crypto market, even though there's that almost that built-in sort of drive to want to see the crypto market decorrelate from Bitcoin. It seems that there's always going to be that strong underlying correlation to Bitcoin, which basically means that now that we're heading into the quarter 4 of 2025, And based on the 4-year cycle, we're on basically that last window before we start to see the first definitive signs of, topping signals and heading into the next bear market for Bitcoin. So this is purely based on, even in the context of macro, euphoric signals should in that sense be seen within the next 2 to 3 months at some point. So I'm definitely I've maintained an overall strong bullish sentiment from the beginning of this year, but I've said since the beginning of this year that once we sort of get to that November-December period of time, and in the context of where things are at with PulseChain and the Richard Heart ecosystem as a whole, and price, and we haven't seen, any kind of like a solid enough uptrend overall, and Bitcoin is not really sort of showing any signs of like, solid from a technical analysis standpoint, like showing really solid higher highs. It could. There's a chance it could be over by that time.
Okay.
Strong.
Right.
So I don't know where you want to go with that, but
well, you alluded to like where I want to go here, and that's like, what signs are you going to be watching for to like let you know that either the bull market is progressing, the bull market is nearing an end, and like the bull market is over? What are going to be like some of the signs that you'll be looking for and are already keeping an eye out on?
Well, one of the top, the definitive top signals that I've seen is, so again, going back to the 4-year cycle. So normally, well, traditionally in previous cycles, Bitcoin has always at least done its initial top. If there was going to be a double top, the initial top would happen roughly around 12 months after the halving traditionally. But this time we actually saw its initial top earlier. It was about 9 months after, so it was around end of January when Bitcoin made its top. Whereas the general 4-year cycle expectation was that it was going to top around sort of March, April. So it was a little bit earlier. So then some would then categorize that as being slightly left translated cycle wise, because it's happened a little bit earlier. And then if that was to be extrapolated as being the case, well, then usually the double top would happen roughly around 6 months after the halving, if it is going to double top. And we actually saw that happen, but it was actually slightly more bullish than last cycle, because last cycle was a double top, slightly higher high, and then it was over. Whereas this time it's actually made, I think it was late August. It actually made a solid. It wasn't just a little, like a slightly higher high. It was a definitively higher high, not a crazy higher high, but better than last cycle. And it's sort of already starting to show a slight downtrend. Doesn't necessarily mean that it doesn't have another leg up to go by sort of end of January at the latest, because we're cycle wise, we're still in that zone where we can see some solidly bullish upside still. And we've seen a solid recovery with ETH as well, both against USD and against Bitcoin as well. And ETH is, unfortunately, as we've seen, it's done a decent enough recovery compared to where it was, 3 or 4 months ago. But ETH arguably has a long way to go, both in USD terms and Bitcoin terms as well. So even if like even if it is accurate to say that Bitcoin, let's just for argument's sake say Bitcoin has topped and it's made its highest high, that doesn't necessarily mean that we won't get like a serious like a bull market season for Ethereum and alts in general over the next 3 to 4 months. So I think this is going to the next and I've been pretty strongly convicted on my position that the next 3 to 4 months is going to heavily determine how future cycles are going to play out, let alone the next 12 to 18 months.
Yeah, I agree with that, actually. So we got a question about that here. I see Fast Abdul's in the chat. He's here just for the tech. RH Max is in the chat. He actually threw in a question there about the next 3 months. I agree with that, actually, because I think if we have a great next 3 months, I mean great next 3 months, like you're seeing things double and triple on the daily.
Yeah.
Absolutely. There's a good chance it's all over by December's end, because people are just going to be like, well, it did what it's supposed to do. And then as the new year starts, well, then a lot of people are going to start selling because it's a new tax year and it's okay to start selling now and realize some profits and everything. So, yeah, I think absolutely. If we do have a great next 3 months, there's a good chance it could all be over for at least another 6 to 12 months before we get running again. But I think we might have a difficult Q4 ahead of us just because of so much economic uncertainty. And I'll tell you, like, what I think is the big uncertainties is, what if the Supreme Court rules that the tariffs are unconstitutional, Trump's tariffs are unconstitutional? Not only do they have to stop doing them, but they got to refund all the money that they collected. And then the U.S. federal deficit goes from being this wide to this wide. That's going to cause a lot of uncertainty because it'll be a fight that they hold up for a long time. You know, what if they have a harder time getting the Fed governors out that they want out, like Lisa Cook, and so that's holding up the vote majority that Trump wants to get the money printer turned on? And also, what if this whole AI thing that all these companies are spending so much money on, blowing away billions of dollars in CapEx, and it turns out that the AI is as good as it's no good at all? It's like the scandal they uncovered with Theranos, where it's like, yeah, this machine that she's raising billions of dollars on doesn't even work. And they find out, like, yeah, the AI is like, it's not a profitable thing. Like, yeah, it can do cool things, but it costs way too much and it brings in too little revenue, so it's not profitable. All sorts of like uncertainty that I have a hard time seeing it get sorted out in the next 3 months. So, like, what Max's question is, what if the bull market starts in Q4? But where I'd take that question is, what if we have a difficult Q4? Does that delay any future bullish action? I mean, I don't want to say it extends the bull run, but does it delay it from occurring until next year? Or does it end everything and it all ends? And what we experience now is just all that we're going to experience in terms of bull action.
Yeah, that's a good question. So let's say that scenario takes place where the next 3 months are at least relatively stagnant, which then would lead to much more certainty in the market and more bullish sentiment leading into 2026. And whether it's a bull mania year or not, the tendency is, even in like a bear market year, which normally 2026 would be a bear market year for Bitcoin, there's still at least some extent or some level of excitement and hype around the new, just because it's the new year. Like January tends to still be like a positive month year on year. And yeah, that's why I say 3 to 4 months, because even if like there could be still a lot of stagnation in the Richard Heart ecosystem, Ethereum alt sector in general, things can happen very very acutely, like within a very short period of time, even just in the month of January alone, and then ends going into February, March. But yeah, there's a chance there can be a delay, and then maybe quarter one. But that quarter one goes into the end of March. But the way I look at it from all vantage points is, even in that kind of scenario, maybe it can kind of get dragged out to sort of late February, early March. But by the time March comes around, Bitcoin wise, I mean, obviously, like it's hard to make like like any kind of absolutes, like and absolute guarantees when it comes to like where it's going to head. But you just look at how the 4-year cycle has played out in crypto wise in all previous cycles, and it looks it looks like it's just one of those data points that can't be ignored. I like when I came into crypto last cycle, the 4-year cycle was a major talking point, but I was still like very sort of new, to the financial/investment world in general, new to crypto, didn't understand the importance of cycle patterns, macro cycle patterns, and how the halvening, the influence that the halvening had overall. And it was largely because I hadn't actually experienced a full bear cycle in crypto. I came in and it was the sun was shining, everything was pumping all the time through 2020, 21. So, but I want to quickly go back to something you said earlier regarding just the macro side of things. You look at there was a lot of expectation in the market if Trump was going to get into office, that there was going, naturally, just going on the election cycle alone as a data point for crypto, that once he got in, because he was very pro crypto policies and all that stuff, that there was going to be a massive resurgence. And but the thing was, like, what ended up happening was that him getting in office, that in a lot of sense was like almost like a sell the news event, and actually sort of almost made it's hard for me to say, but it actually almost made the top at the time, and it dovetailed with Solana making pretty much making its top as well at that time. So when it comes to macro and how the ripple effect of macro, positive or negative, on crypto, it's really hard to sort of, we've seen this cycle, it's hard to determine with any definitiveness how positive it's going to have, the kind of positive or negative impact it's going to have on crypto, given how things have played out since Trump has come in. What are your thoughts on that?
I think that Trump coming in, like, that's just the first step in like a very long journey that needs to be taken to for his presence to have any meaning. Because like just the guy walking into the Oval Office, that doesn't really move the price. But it moves the price, but it's not going to move the price like in a very meaningful, permanent way. You got to get actual policies, because like that's true of TradFi. Is like the first time Trump got elected way back in 2016, a lot of people, I was working in TradFi at the time, a lot of people calling up, panicking and everything. And the talking points that we were given was the talking points that the company used all the time in every election is just who wins the election historically has not had that much of an effect on the markets. It's the policies that they push. And I think that the policies that people were expecting from Trump was a Bitcoin strategic reserve where they were actually going to be buying Bitcoin. That didn't happen. Like, yeah, he started the reserve, but they haven't really bought any Bitcoin with it. And I think that the policy that everybody is waiting for the change to come to make this policy happen is going to be quantitative easing going off. Well, the president doesn't quite control that, but he has a little bit of influence on that. So, specifically, he's got to appoint a 4-vote majority on the federal board of governors. He needs a 4-vote majority there. Then he needs a 7-vote majority on the federal open market committee. They're working really hard to make that happen. That's why they're going after Lisa Cook over that mortgage fraud thing, even though they all commit it. But let me ask you about that, actually. So suppose Trump gets his majorities on the board of governors and the open market committee, and they do what he wants them to do, because it's clear he wants them to cut the rates down to at least 2%, the federal funds rate down to 2%.
Yeah, and 2% is historically always been the sweet spot. That's where they ideally want it to be sitting at.
They do that, and then they turn the money printer back on. We get quantitative easing again, and maybe like maybe it's just the United States that's doing money printing, because like China will be done with their quantitative easing, but like with the amount of money that they're going to need to print to like make the national debt here in America like more serviceable, it's going to need to be a pretty big amount here. So suppose that doesn't happen. I mean, I think that doesn't really happen until at the earliest June 2026, just because of how long all this stuff takes. Well, by then, if we followed the 4-year cycle, we should be in a bear market by then. So what would you say happens, though, if we get those good Fed policies of low interest rates and quantitative easing printing off more money? Is crypto, as you say, is it still going to keep going down or stay flat while the money printer is going off?
Well, I think, yeah, I mean, even technically, like, even in the bear market for Bitcoin, which would traditionally be like the whole of next year up until the end of next year, money printing will still be happening, and yeah, the the policies around, just the cutting of the rates will probably get heavier and heavier. It doesn't necessarily mean that there'll be enough, because there's always going to be buy pressure and sell pressure, and so I just think generally like there's going to be like more sell pressure than buy pressure coming in, especially given that the ETFs have, because there was always a huge amount of, before the ETFs dropped for Bitcoin and Ethereum, there was always the speculation in the past of, okay, like when the ETFs drop, that's basically that's when all the or a lot of the extra retail comes in, institutions come in, especially, and there's sort of like it's hard to see, like once institutions are in, and we've already been seeing BlackRock buying huge amounts of Bitcoin as well, even up to this point. Yeah, I just think there's yeah, I think even with like things going Trump's way and cutting of the rates and all that, I still think that the Bitcoin is going to have its correction. How deep that correction next year is going to be, it's hard to say. Traditionally, in previous cycles, it's been sort of like the 75 to 85% range. It could end up being, my personal expectation is that there'll be a crash, but a softer crash than previous cycles. Maybe even only as small as maybe 65, even 60, 65%, even as little as that. Because naturally, top of the S curve for Bitcoin implies that there's, a dampened upside, but also a mitigated, a dampened upside, but a mitigated downside as well. So the downside isn't as volatile, and upside isn't as volatile. So, of course, as well, there could be a little bit of a deviation because of what's perceived to be a left translated nature of the cycle itself. Bitcoin topping earlier and then doing its so-called double top or higher high earlier in the year as well, which lines up with that. So yeah, I definitely don't subscribe to the whole extended cycle theory, which would imply that we just need to see more pain for the rest of this year, and then which the ISM data metric, which some people put out, sort of lends to the idea that we can somehow break the 4-year cycle and we can have an extended cycle beginning from like Q1, Q2 of next year, and the whole 4-year cycle of Bitcoin is gone. I personally would love that for that to be true and that to actually happen, for that to be a possibility. But from my personal experience and what I've observed, and just my understanding of the underestimated nature of cycle patterns, it's hard for me to like subscribe to that as a genuine possibility.
Let's hit on that specifically right here, because I think that is like the main point where you and I don't see things the same way. Because if you ask me like my thesis, like if a friend that I'm trying to get into crypto really presses me and says, Cairo, you got to tell me what causes this to go up And you can't just say, well, it's because you have more buyers than sellers. I want to know exactly what is causing more buyers than sellers. What is inspiring those to be more buyers than sellers? Like, what is the real cause of all this?
Human
And
emotion. Yeah, a lot of people would argue is it's purely based on sentiment, confidence, human emotion, all that stuff.
okay, what I would tell that person though is yes, but even that has to be inspired by something. And what I see as the first domino that falls and knocks everything else over and like really gets it going is I think that the backbone of all these bull runs is money printing. Because
Yeah,
with money printing, you get debasement, and that debasement really inspires people, hey, I got to make this money grow because its purchasing power is declining. But then also the debasement itself, because it's flooding our economy with the world economy with so many new dollar bills that need a place to go, and
yeah,
the real economy is just not making enough stuff to
yeah,
give those dollar bills a place to go. They typically go into financial assets, and some people will point to the ISM, and like I've heard Raoul Pal's argument on that. I think that I got a chart here for that here, which is this. I mean, really, what it is I still think it goes back to money printing because like the ISM and the global M2, they go together, which is what this chart kind of shows. But then like the global liquidity or the global M2, and this just tracks the price of Bitcoin, they seem to really go together too with some deviation. Like if I ran a regression on this, what it says is like there's an 85% correlation. And the other 15% where it doesn't correlate, it's because like there's some really freak accidents going on, like the Mount Gox crumble or the Luna token crumble, those things. But also, like when we get in really close here, sometimes you see a divergence between the M2 and the price of Bitcoin. That divergence, it only lasts probably for about the longest I could find was like probably one of these over here. The longest I could find was a divergence that went on for like 90 days at the most. And then Bitcoin comes roaring right back. So you ask me like my thesis to explain to somebody why does it go up at all? I say it all starts with money printing. Let's
yeah.
turn it over to you here. What would you say is the real force or the real explanation for what creates and causes the cycle as a whole in general? What governs, what guides, and drives the cycle? If a friend asks you, hey, T-Bird, I really want to get into this crypto thing. You seem to be doing well with it, but I just really got to know what causes it to go up so I know what I'm doing when I'm doing it. What would you tell them?
I would point them to something it's coined as reflexivity. So people that are unaware of what reflexivity is, especially in the context of financial markets, in a nutshell, it's basically how human psychology and human emotion works. So what happens is that, and Richard Hart was the person that fully that very vividly explained this to the community like years and years ago. Um, and it basically gave me a lot more clarity on how the cycles operate. So basically, in a nutshell, um, at when the price goes up, it continues to go up, and then it continues to go up, and that continues to go up because people, the higher it goes up on a macro scale, the more bullish people get, the more people start to get induced FOMO and start to feel like, oh shit, I didn't get in, I need to get in now because oh shit, it's going to keep going up. I better, because and then the higher it goes up, and that's what causes the blow off tops, is that there's like a point at which so much collective FOMO is generated from human psychology / emotion in the collective that it just blows off. And then when that happens, that will typically mark the top, and then starts to, and it's basically like the Wall Street cheat sheet. If people aren't familiar with the Wall Street cheat sheet diagram, illustrates this in the context of like the visualization of the chart shows that emotionality over a cycle. So when it gets to the top, it starts going down. People think, oh no, it can't possibly be over. Does a complacency rally, and sort of comes close to retesting that top, but doesn't quite get there. It's like a lower high, and then it keeps making lower lows. So people sell. It goes lower, so people sell more. Goes lower, people sell more, until it finds a new floor and finds a new bottom, and then it's just like a rinse and repeat pattern of reflexivity. So that I would say, if someone asked me about that, that would be what I would most lead people to in terms of understanding why and how the 4-year cycle operates the way it does. Even if there is a little bit of a deviation, whether it's left translated or right translated, there's always room for deviation. But the overall reflexivity of the 4-year cycle, based on hive mind, and hive mind is essentially hive emotion, and emotions is what causes the volatility in the market, in the crypto market especially, because the crypto market, more than any other financial market, runs more on emotion than any other market, because it's the least manipulated as well.
Oh, no doubt that like people love to buy green candles. They love to buy the tops.
Yep.
They love to sell the red candles,
Yep.
and they love to sell the bottoms.
Yeah.
But is there, if say like the friend pressed you, be like, well, okay, well the reflexivity definitely explains why they continue going up when you think they should run out of steam. But like, what causes the first snowflake in the avalanche? What is it that inspires the first people to place their buy orders roughly around the same time to get like that first green candle going? Would you say that there is some sort of macro cause to it, or is that random?
Yeah. It's like, in my opinion, it's definitely not random. And there's also like some might sort of a lot of people in the financial world might consider this to be woo-woo stuff, but I firmly believe that there's an energetic component when it comes to when it comes to macro cycles and the hive mind, when it comes to psychology and emotion of the market, which is the primary needle that moves the price in the end. So yeah, and it's a lot of, it's pent up emotion. When it's in the euphoria stage, it's pent up emotion in terms of euphoria, and at the bottom, it's the direct opposite. It's the absolute capitulation of, screw this, I'm out. I can't handle this anymore. So it's two opposing forces of capitulation to the upside and capitulation to the downside. But no matter what, at some point there will be a top at every cycle, and there'll always be a bottom at every cycle. But what I've come to observe, experiencing a full market cycle in crypto now, is the top is a lot easier to read than the bottom. It's really, really hard to call a definitive, but especially in advance. I mean, some people can retrospectively, the bottom is in, and then 3 or 4 weeks later, like, oh yeah, the bottom is definitely in. Yeah, it's all well and good to sort of try to beat your chest and humble brag that that you've called the bottom 3 or 4 weeks after it happens, but there are very few people out there that can. Even Richard Hart is the master at calling tops, and that's still like on especially on the day, like that's serious skill. But he's definitely missed bottoms.
Yeah.
But it's understandable, because he's still even someone like him who's very well versed in how the cycles operate. That just goes to show just how hard it is to call the bottom.
Yeah, definitely. I'll ask you 2 more questions about like the crypto market cycle in general. Then we'll like move on to talking about like Hex specifically and like Richard Hart stuff specifically. Neil for T shares, I see your question there in the chat. If you can tell me what appointments you're specifically talking about, I'll bring that question up. He asks, do you think the implementation of the Genius Act is being held up by some of these appointments? Tell me which specific appointments you mean right there, because like if you're talking about like appointments of the Fed, I don't think that has anything to do with the implementation of the Genius Act. So let's see. A question I wanted to ask you about the overall crypto market cycle is a tweet that stood out to me, which was this one here. So you said, all these people sucking off the business ISM narratives, I guess we mean Raoul Powell there, live in Max Cope Bulltard illusion. Well, I'll confess I'm definitely a confirmed Bulltard, even though a lot of people think I've been bearish lately because I'm saying, hey, everything's going to take longer. I'm not bearish. I'm still very Bulltardish here. Let's see. They don't know how the 4-year cycle works. They basically have to default to Bulltard mode 24/7. Oh, hey, optimism's good for your health, right? Just to function. Even during the Bitcoin bear, when Bitcoin is trending down, they'll still be Bulltard no matter what. They will spin any narrative to support their permanent Bulltardation. Well, I did experience this biting me in the butt back in the 2022 declines there, because I was hearing, the narrative was pretty dominant back then, to like, hey, this could be an extended bull run, or hey, it's a super cycle. And really, when you hear stuff like that, that should be frightening, just because of like the poor predictive accuracy that's had. It's had very poor accuracy here. But
Yeah.
what specific historical data would you point to that makes you confident that halvings and anything else that you think is inspiring the 4-year cycle is so much more powerful to override the macro forces of massive amounts of money being printed, or the possibility of all the euro dollars being repatriated into stable coins, which like how just bringing that money into stable coins, even if it's just some of those stable coins going to DeFi protocols, that's going to be very good for crypto in general. So what could you point to say, well, this convinced me that the 4-year cycle and what causes it is just more powerful than anything macro could throw at us, including the ISM. Anything ISM could do, it's just not powerful enough to override this.
Okay. Firstly, just with regard to my tweet, sometimes I can be a little bit exaggerative, if that's the word, with how I frame my tweets.
Well, I appreciate the bluntness of it, though.
Yeah, I can be blunt. I can be colorful with how I frame my tweets. Just to, to a bit provocative as well, just to sort of potentially trigger a few people out there. But a lot of it really just stems from my own experience, because I was full Bulltard through most of the bear market, not just bear cycle in terms of Bitcoin, but the Richard Art ecosystem and alts in general. But again, that came from a place of having no frame of reference, of experiencing a full bear cycle and what it fully entails, purely in the context of crypto as an asset class. So yeah, I got kicked in the guts, figuratively speaking, through a lot of it. Understanding that no matter, and I'm inherently like, I would say overall I'm a pretty optimistic person, and I especially in the context of crypto and my conviction holds with in crypto. It's automatically seems net positive to maintain that bullish that raw bullish sentiment, especially someone who's been in crypto Twitter for years and putting out the content that I put out on Twitter and with my podcast as well. So I fully empathize and understand why a lot of people will still want to stay in that bull that bullish zone, so to speak, even when the market as a whole is showing certain definitive signals of what's really going on. So yeah, money printing is 100% a serious factor in play from a macro standpoint, and a lot of that money, especially when the rates start to get cut, um, and other factors associating with that. A lot of that has to go somewhere, and it's got to go into risk on stuff so that. But again, like it's hard because you want to see especially the bull mania year more than any other year. You want to see that risk on appetite coming in from retail, from institutions, from all areas of the market. But because we've had so much quantitative tightening and hiking rates since 2022, it's made it like very difficult for that risk on appetite to be injected. So the Fed hasn't done the crypto market any favors, and that's exactly why Trump has been trying. Naturally, as a lot of us would know, that he's trying to reverse those policies, like ever since he got in. And so it's correct, right, that we've just seen the first cutting of rates, right? It was 25 basis points, right?
That's right. Just 1 week ago, practically, or not even
Yes.
one a week ago. But yeah, it was a week ago on
Yes,
September
that's bullish.
17th.
So we're finally seeing like some signals from the macro that they realize that they couldn't drag out this high interest rate environment for that much longer, and it always feels like it's a lot longer time wise in crypto because everything in crypto slows down because it's such a fast moving market. And 3 years of hiking rates and quantitative tightening, we've never actually seen that actually manifest in all other previous cycles. We had a more optimized environment for euphoric bull cycles for crypto. So this cycle is a little bit different in that sense. But because of the power of the 4 year cycle pattern, relative to that, whether you want to say it's due to the halvenings or not, as an actual thing, I still firmly stand on the position that 4 year cycle is plays a very integral role in the movement of the market itself. And so, yeah, my hope is that we start to see a very strong definitive uptrend, beginning, the start of October, which is now here. And I'm personally really happy that September's over because September, as we know, also September's traditionally, like you expect September to be a really shit month. And I would still say, like what you were talking about before, like this September of this year, you definitely could argue it's been a better September than previous ones, especially in the context of the previous bull mania years. But yeah, it's either way, the next 3 months are going to be very entertaining, whichever way it goes.
Yeah, definitely. So let's talk about like this other tweet here that stood out to me. Where did I put it? Was this? Okay, yeah, this one here about the Bitcoin top. You'd said here that I mean you're not being definitive about it. You're not being affirmative, but you say you
Yeah,
think it's possible that
yeah,
the Bitcoin top is in. Now, I'll ask you like what led you to that conclusion because like what's kind of what I'm looking at to see if the Bitcoin top is in is some cycle indicators that had been marking it from previous cycles. Like we got 30 of them over on Coin Market Cap. It's very nice of them now to finally put these up here to see like, well, here's what they think is going to mark the top. So far, none of these have gone off except for one, and that was this ETF to BTC ratio. And really, it was a false positive because if you have a volatile day, this thing's going to go off every time. But none of them have really gone off yet. So,
yeah.
in your view, what would you say? What led you to this conclusion?
Yeah, yeah. So to answer your question, so I definitely still lean towards the likelihood of the Bitcoin top being in, but like you say, we haven't actually like market wide, we haven't actually experienced euphoria for Bitcoin. So yeah, there's easily a strong enough argument out there to say that the Bitcoin top is not in. The main reason why I'm leaning towards the Bitcoin top being in, again, as I alluded to before, the left translated nature of the 4-year cycle, the first top of Bitcoin hitting late January, and then the 6 months, roughly 6-7 months later, like it did in the previous cycle, made its higher high, and it's been, tracking sideways downward since that point. So also from a technical analysis standpoint, because I look at I treat TA seriously as well, and yeah, the TAs also indicates that there's a strong chance. I have to accept that there's a strong possibility that it's in. But again, like I said, just because the Bitcoin top is in doesn't mean the cycle as a whole is over. It just means that the cycle in the context of Bitcoin might be over, and there's still a solid window, Q4 into even the first month of Q1 next year, where we can see a flood of almost panic buying into ETH and the altcoin sector overall, including the Richard Art ecosystem, to close out the cycle completely.
Yeah, let's talk about altcoins and alt season next year. And everybody that's watching, if you got questions for T-Bird, get them in now because I don't have them for too much longer. But let's kind of shift over to alt season because, like previous cycles, well, Bitcoin has already been running by now, and alts, well, they would be doing a lot better than they're doing now in a normal cycle. What would you say has been like causing the underperformance in alts this time around?
Well, we've seen because of the Bitcoin ETF. It's an interesting question because when the Bitcoin ETF landed, the general market expectation was that the ETH ETF wouldn't hit until much further down in the cycle. But what happened was the ETH ETF landed very, very soon after the Bitcoin ETF landed. But the interesting outcome, what ended up materializing, was that the Bitcoin ETF caused a huge amount of like massive injections into Bitcoin, but it had the opposite effect for ETH, which I thought was really strange. You'd think if the Bitcoin ETF, like from a logical standpoint, if a whole people are going to be flooding into Bitcoin because of the Bitcoin ETF, same would apply for Ethereum, but it didn't play out that way. But in the end, it could actually end up going into ETH's favor because we've seen. Correct me if I'm wrong on this, but we've seen definitive evidence that Trump and some big players were piling into ETH even when it was still on the downtrend before it bounced back up. So there's more than enough macro evidence out there to support the notion that Bitcoin have been taking in so much of the economic energy that now that excessive energy that's gone into Bitcoin needs to go somewhere as well. Like, and we have seen that. Like, there's been a solid rotation of Bitcoin back into ETH as well. Still a long way to go, but at least there's been a start. And Solana has definitely topped out. That to me, in my opinion, that's a given. And Solana, in a lot of ways, is going to be tracking Bitcoin side by side, and we've seen how that's played out over the last sort of 18 months or 20, even up to 24 months. And there's multiple vantage points that supports that. So so I kind of went on a bit of a tangent there, but did I cover that question?
Yeah, so you say Solana is probably topped too, and we'll just kind of like track along with Bitcoin. So like, I think Solana's highest price so far has been about 300. But anything else you think has been causing underperformance in altcoins, particularly Ethereum, because like, yeah, the ETF didn't do much for it.
Well, yeah. Well, naturally, like ETH tends to be perceived as the spear of the entire altcoin sector. So alts aren't, generally, market sentiment wise is not going to move until ETH starts to really move. And yet, yes, ETH has made a decent amount of headway, but there's always also the correlation of ETH to Bitcoin as well because of liquidity as well. So there's the liquidity bonding factor of ETH to Bitcoin, but in the context of like underperformance with altcoins, I think it's naturally just because of the Bitcoin ETF and how much has gone into how much focus and how much influence there is out there, both in social media and other platforms that gets people to over leverage and overbuy Bitcoin. So, and when there's overbuying in Bitcoin and over leverage in Bitcoin at the tops, there's generally that's going to translate to less interest in the alts.
Yeah.
So in a lot of ways. So
Well, let me show you what I think could get us going. Like, I want to ask you, where do you think it's going to get it? What will it take to get us going? Let me show you what I think will do it. Like, we're going to transition to eHex as well here. Like, we'll stay on alts for just a second here, but then we'll talk about eHex because I know you like eHex. I like it too, actually. But let's start with this here. Let's look at eHex. So, like, the last before PulseChain was born, the last fond memories I have of eHex was in March 2023.
Yeah, the V3. We call it the V3 testnet pump.
Well, was it really the V3? Because this date here, March 22nd, I mean, we made some serious ground here in a very short amount of time, going from like less than 6 cents to almost 12 cents in just a few days. And at the beginning of the year, we were down to a penny. Was it really the V3? Because, like, yeah, that was going on at the time, and I remember the excitement around it. But let's look at something that I guess we could say is antithetical to Hex. Good old Cardanzo. Right around the same time right here, Cardanzo had, let's see, is this March? Yeah, March roughly the 9th. It was down at a low and then started going up. Ethereum, March the 9th, was down here at a low, then started going up. Bitcoin, March the 10th, was down at a low, then started going up. Now, nothing went up as much as us here because, like, maybe the V3 announcement had something to do with it. But to see, like, all these coins that don't really relate to each other going up together. Now, of course, these guys moved less than we did, but it's because it's Bitcoin. It takes a lot more to make it move. It's Ethereum. It's Cardanzo. These are the big boys, and they're also more pronounced in the sense like they're easier to buy than we are, and because we're harder to buy, we actually move faster.
Yeah, and you've got someone like Michael Saylor that'll just keep buying the tops, constantly as well.
Exactly. But what could have happened? What could have happened in March to like really get some juice going into all of crypto? You remember SVB, right? Silicon Valley Bank.
Yeah, I remember that. Yeah, and when that went down.
Remember this little incident here? You see, like, even though quantitative tightening had been going on, there's this little stick up right here. Yeah. Wednesday, March 22nd, 2023. And this kind of tells me here that you have this deviation in Fed balance sheet policy and crypto reacting the way that it does. That tells me that, like, hey, if we just get that money printer turned back on, everything going to pump. Because, like, even, I imagine, like, the V3.
Let me speak to the SVB. So you're saying that pump, like, perfectly synchronized with when the SVB scandal happened.
I think it was March 2023, yeah.
Yeah, and it actually makes sense that lines up because when that was happening, that, of course, would lead market sentiment to be really bullish for crypto in general because of, like, the level of uncertainty that would have been put onto display with regard to the fiat system. So when there's when something happens in the macro like that, to that extent, where it gets people to perceive fiat as being extremely bearish and problematic and all that stuff, there's going to be a rush into crypto because of from the vantage point of security and actual safety of how people store money. So those narratives start to creep back in.
Yeah.
And those narratives push it up as well.
Yeah. Hex in particular was like,
Yeah.
I think at the time it had like the most be your own bank narrative to it.
Yeah. And it should, because Hex is literally like one of the few coins out there that 100% shines the light on the inherent ideals of crypto and why we're in crypto at all.
Yeah.
Real reason why we're in crypto. So
yeah. So I say, like, just get the money printer going. That's going to get the altcoins going. But you just think that is there anything else that you say could get it going, or do you see it differently?
I think there's enough now for Hex on Ethereum specifically, because there was a long period of time that was just there was an overarching bearishness around Hex on Ethereum. One, because of that strange 860 million transfer from the God Whale to BankX. So that was automatically seen as a massive sell pressure event. So which really sucked. But now that's out of the equation now completely, because they're now almost down to they've almost completely emptied their bags. So that's hugely bullish. There was also a long period of time where there was so much negative sentiment around Richard Hart and the SEC and all that stuff, which led to Uniswap and Uniswap naturally being the number one go-to on the Ethereum side as a decentralized exchange to get Hex. Hex was fully delisted on there for a long time. And also MetaMask also made it extremely difficult. I can't remember whether it was banned on MetaMask or it was just hidden or whatever. Same sort of deal on MetaMask. And MetaMask is, on the Ethereum side, is the default number one wallet that people use on the ETH side. So with those two things in place, that was also served as a massive, there was a bearish undertone around that. But that's gone away now too. So the way I look at it is that the two biggest bearish elements that were in play for a long time are now gone. So that allows for so people can easily access it and trade Hex on Ethereum now. Like for a long period of time, it wasn't. Plus, just the general positive sentiment around Richard Hart winning the SEC case. There's no way they can be stigmatized as securities anymore, and all that stuff. That also helps as well. So there's a congruence, or that's the word, of positive factors and positive narratives that are starting to flow in the favor of Hex on Ethereum now, whereas for a long time that wasn't the case.
Yeah. Johnny Chaos has entered the chat. Hi, Johnny. So we'll get into the Hex part of it here. There's always I followed like some of your posts for the past couple of days here, and correct me if I'm wrong, but my perception is it possible that you've lost some love for Richard Hart because of he focused so much on the PulseChain side of things and neglected Hex. Of course, nobody liked the kill tweet and everything.
Yeah.
And now, you kind of also seem laughing that Hex is doing very well, while the thing that Richard had been focusing on ain't doing so great. Tell me how you see it. Yeah.
Yeah. To answer your question, that's just me, just having a bit of fun and sort of poking the bear, so to speak. Especially because he blocked me. So that's me just being a bit feisty in that regard is me just sort of having I don't know if this is the right way of putting it, almost passive aggressively having a go at some of the decisions he's made in the past, which I definitely didn't agree with. I think ultimately, I made my position pretty clear on some of my tweets that, he definitely, and of course, people can definitely rebut these arguments, and the whole shaking out the weak hands sort of narratives. But yeah, like when he outright said, like publicly, he didn't have to say it publicly too. He could have kept it to himself and just said, Hex on PulseChain, PulseX Inc are cool, and just not talk about Hex on Ethereum, which was fine. And that's, but and I can understand from his standpoint why at that time he would have felt like he needed to do that, but at the same, and he probably would have waited up to a certain extent as to whether he should execute a tweet like that. But at the end of the day, it's definitely served to be a net negative, especially given at that point in time that the stuff around the SEC was still fever pitch. So it didn't. So everything was so overarchingly negative just on the SEC front alone, and then for him to it was the timing of that tweet as well. It wasn't just the tweet itself; it was the timing of it, given the SEC stuff. And there were a lot of people there were a lot of influencers and content creators like me who really we were already on the back foot in a lot of ways because of how much was coming down on us from every angle. So to execute that tweet at that time, especially given like what the chart was doing at the time too, because Hex on Ethereum, right up until he executed that tweet, was actually showing a lot of strength. So it was sort of like, yeah, it just at least from a perceptual standpoint, it just looks really bad, and it ended up. At least it seems like on the surface that it's had a negative ripple effect on the pulse chain charts.
Yeah.
Because at the end of the day, people that are new or people that have been around but never really got involved with the Hex and PulseChain community, a lot of them will automatically defer to the Hex on Ethereum chart before actually looking to see what's going on PulseChain. And so when they see that the Hex on Ethereum, which was Richard's first coin and what started everything, and he sees the lack of performance on it, so and now where it's no surprise to me that we're starting to see a bit of a resurgence with Hex on Ethereum.
Yeah.
And you could almost argue that there's a bit of a decorrelation happening as well, both in terms of liquidity, but also in community perception as well of Hex on Ethereum. Because you get I'm sure like yourself, you've been around for a while, you've seen that there's a bit of a division going on between certain people in PulseChain. There are guys that fully middle finger Hex on Ethereum, stay away from it, and all that stuff.
Yeah,
I've always firmly stood in the middle from the very beginning because I've got stakes on both.
Yeah, I've had the argument with Gigapulse, who I actually like, but he is PulseChain Hex exclusive and thinks we should abandon eHex because of the kill tweet. He was saying, well, that's Richard telling us that we should. Well, what I didn't read in that kill tweet was that he wanted to kill eHex. I mean, I think the whole purpose of it was that he just wanted to shake out BankX or some other weak hands or something. But like, if he really wanted to kill eHex, why didn't he do a migration like Phantom did, moving everything over to Sonic? Why didn't he do a migration like Matic did with Pole? Why didn't he have the OA just dump all of the eHex, because that would have totally killed it? And instead, he did the opposite. He had the OA stake all of the eHex. Like, why would you even do that if you wanted PulseChain Hex to dominate? You would just stake the PulseChain Hex and leave the Ethereum Hex out in the open right there. So I don't really think that he wants to destroy eHex.
No, yes, you're right. And that the absolute evidence point that everyone should have known that obviously his intent behind that tweet and just in general in his sentiment, him like basically at least perceivably abandoning it, that was out the window when he did that massive OA staking event, which happened around February, I think it was like early February, when he did those huge ladders, but for both Hex on PulseChain and Hex on Ethereum. So that should have been like the absolute evidence point for people that
Yeah.
obviously that the initial intent was not to kill it, and a part of me knew that as well. But again, it all comes down to the market's perception of it, whether that was his intent or not. I'm sure there would have been a lot of people out there that would have been extremely confused by it was also like how he framed it and the specific language he used in that tweet. He could have framed it in different ways where, and naturally the chart tells the story. Like after you put out that tweet, it was just, it was almost like some like the whales just collectively just smashed the sell button all at once.
I was furious about that because I had just onboarded somebody into eHex. So when that happened, I was just furious.
Yeah, a lot of us were.
Mm-hmm. Yeah. So, everybody in the chat only got T-Bird for about another 10 minutes. So if you got questions, you better get them in right now so we can get to them. So the next question I got for you here is like, what is it you think has caused PulseChain, and not just PulseChain Hex, but PulseChain as a whole, to underperform?
I think because, I think at least partly the reason for it is because of the dilution of L1s in this cycle. So in previous cycles, you had the competition. There were a lot less chains, and the competition between those lesser quantity of chains was really fierce. Whereas now, you're seeing layer ones and all kinds of other chains coming out of the woodwork, and so there's a much stronger dilution of blockchains out there now, especially in the context of forks of ETH. There is definitely, and I've pointed this out in some of my tweets, that there are a real selling point for PulseChain, though, is the security and safety aspects of it. But whether those selling points are enough to entice the market, so I think certain things need to happen in the macro side of things with crypto before people start to realize the importance of the safety and security elements that are enshrined by PulseChain that are completely ignored by the other chains. So it's difficult, like using the technical selling points and the safety and security selling points when the market doesn't seem to care much about it. At least, I mean, I think inevitably they're going to have to care about it, but when that that point in time happens is hard to say, especially in the context of the cycles. So, my personal hope is that we start to see, hopefully, Richard Hart being a little bit more active than he has been, because at the end of the day, like, a major founder in crypto needs to be seen by the market as being consistently active, to inspire confidence and all that stuff. So, especially given just the life cycle of crypto overall, we're now what is it, 16 years since Bitcoin's launch. So we're pretty, we're relatively late in the life cycle of Bitcoin itself, which has its own impact on the rest of crypto in general too. So yeah, the next 3 to 4 months is, in my opinion, is critical. So, but again, there's no guarantees. The 4-year cycle could break for the first time, and who knows? But yeah, I've got my convictions. So yeah.
All right, got a few questions from the chat here. We'll try to knock them out here in like a lightning round. First one: do you think interpol matters at all?
To a degree. The Interpol stuff definitely mattered when the SEC stuff hadn't been resolved yet. But once, because the Interpol FUD and the whole Interpol stuff happened in December 24, and then the SEC win and full resolution occurred in May of 25. So my personal take was that by the time, and technically you could argue it dragged out until July because there was a bit of wiggle room for the SEC to appeal, which then got thrown out, obviously, by July. Even if you were to say, okay, drag that out to July, the Interpol stuff shouldn't have played that much of a role in terms of fudding the price from July onward, basically. And so now we're sort of like end of September, so July. So basically, the Interpol stuff shouldn't have really carried that much weight over the last 3 months in terms of keeping the price suppressed or maintaining a bearish sentiment. So hopefully, I mean, it is still only a 3-month period, but again, 3 months in crypto is like 3 years in normal time. So the Interpol stuff shouldn't really play a role in terms of him, like in terms of Richard Hart using it as an excuse to be less active. Arguable since July, basically.
You think like Richard coming back and like streaming, particularly right now with sentiments being where they are, does that help the prices dramatically, or is it possible that could be like this thing where you play this card and you waste the card and you show that it doesn't have the power that everybody thought it did, and now you don't have that card to play anymore? What do you think happens if he came back right now specifically?
That's the thing. If he's going to play that card, it's basically got, pretty much has to be now or within the next 4 weeks, because if assuming that the 4-year cycle and where we're at in the bull mania year and those components, given where we're at, if he's going to pull that card, it has to be now, unless his mindset will be, I can maybe pull that card, even as deep as sort of January, February next year. But like knowing, like observing how he's operated and how much he weighs in on the 4-year cycle, I don't see that kind of scenario playing out. He would, again, if he's going to play that card, it'd have to be now. And how much of a dramatic impact it would have on price, it's hard to say for sure. But if I was in his position, I'd still play that card anyway, even if it doesn't end up working out that, being extra active, has a positive effect. But I think, from a balance of probabilities, the probability is him being a little bit more front facing and, more active than he has been. It's a high probability that it'll have a more positive impact than a negative.
All right. Last 2 questions here. Is there anything that could happen, or what would it take to get you to change your view on the 4-year cycle and start thinking, well, maybe we can go on longer than we previously had?
Yeah, what would change? Trend is your friend. So basically, what would get me to change that is if 2026 ends up being the opposite of what I expect, which would mean that some kind of extended cycle happens wherein you see like a whole new, like a massive run in Bitcoin, or at least a massive run in Ethereum going all the way up until the middle of next year. And then I'll be like, all right, yeah, that would be the evidence of it breaking. But unless that actually materializes, I can't get on board with it, because again, trend is your friend, and in all previous cycles, it hasn't worked out that way. So yeah, so I guess we'll see how it all plans out, how it all turns out.
All right, last question, since we got a minute left right here. Tell the people, like, where can they find you? What does T-Bird have coming up as far as like places you're going to appear, content you're going to create? What can people expect from you coming up?
Yeah. So I'm, best place to find me by default is on Twitter /X. My handle is @TheRealTBirdHex. It's my only account. If you get DMs from any other source that looks like me, it's not me. They're imposters. I also started up my my YouTube podcast back in March of this year, and I've been putting out a bit of content through there. The handle for my YouTube podcast is T-Bird369. So you can find me on there. And there's a good. I've sort of been a little bit quieter over the last quarter three, but going into quarter four, there's a good chance you'll be able to see me a little bit more active again on my live streams on YouTube. So, but yeah, like all updates with regard to my YouTube channel content, you can always find on my Twitter.
All right, excellent. And I tell you what, I think that as we get deeper into Q4, like I'm thinking probably November, like right after Thanksgiving or so, maybe we should revisit this conversation to see where we're at and see like if either one of us has drifted more towards the other in terms of like how we view where this cycle is going to go and when it's going to end. So maybe I'm closer to thinking like you, or you're closer to thinking like me. You'd be down with another conversation in like late November?
We can do that. Not a problem at all. Yeah.
All right. Well, hey, T-Bird, been a pleasure having you on right here. Great guests. Hopefully we get more guests on like you, and we can't wait to talk to you later into the Q4 there to see where we're at.
Appreciate it. And much love to everyone in the chat, and sending a shout out to Johnny Chaos, true legend in the Hex and PulseChain community. Thanks to everyone for tuning in.
Absolutely. All right, you guys, and don't forget to check out our spaces tomorrow night on with Tam Tam. We do Hexakin University starting at 7 p.m. Eastern time, Eastern Standard Time on X Spaces. So we'll see you guys there. That is it for us today, you glorious degens. Smash that subscribe button to join the rebellion, and follow me on X. For more
Reinvent Ideal for more unfiltered truth bombs
if this was your first time listening, head over to reinventideal.substack.com, because I have a free gift waiting for you there. If you become a free subscriber, you'll get a free copy of my book, Your Parents Were Wrong, Debunking and Replacing Outdated Advice, packed with the wisdom to outsmart the system. It's absolutely free to join, so no excuses. Grab it before the suits catch on. And remember, the bears get blocked right here and told to shut the FUD up. Until next time, this is Cairo Copeland, your millennial Moses, here to lead the most jaded generation to financial liberation. All right, T-Bird, it was a pleasure talking to you here. Let me try to unmute you here if I can do that.